Hello everyone, this is going to be a trade breakdown of RPL USD trade. For me, a trade consists of trade is broken into two parts. First is the bias and second is the entry module. I'll start with my bias. So we had this bullish momentum going on weekly time frame. So my bias was long, and now going to the entry module. We had this liquidity. I'll mark liquidity with white and break of structures with red. We had taken this liquidity in the opposite direction of trend. That's important. The trend was bullish and liquidity was taken in the opposite direction. That's what I'm saying. And this was the break of structure after this liquidity sweep. The break of structures will be marked in red, more red. And after break of structure, we had this fair value gap that was, you can say, untapped or unfilled, left open, whatever term you use. And we were building this liquidity right above this fair value gap. After a break of structure, we were building a liquidity. Okay, so still had no entry module for it until now. Okay, on daily time frame, we had more liquidity. This was the break of that weekly time frame break of structure, and we had this liquidity on daily time frame. So we had taken a lot of liquidity in the opposite direction of trend, and now going to the entry module. So this is one of my entry modules that I usually take for trades. Okay, for this this is a range low. This was the liquidity that got swept in the daily time frame. So we had an ample amount of liquidity that was taken in the opposite direction of trend. So it was a much safer place to look for long positions. Long positions, I mean trade in the upward direction. I think that should know at least this. Okay, so this was so after taking out this liquidity on this was the weekly time frame liquidity and the daily time frame liquidity and filling that weekly time frame fair value gap, we were forming a range. Now this was the range low, and we had this deviation of the range lows, so it was clear that price did not hold below this low, and I was expecting, since my bias was long, I was expecting at least a deviation above the range highs. And dropping to the 4-hour time frame. So inside this range, after taking the liquidity on the bottom side, we had multiple attempts to take out the liquidity in the opposite directions. It was the first attempt. Break it down into two parts. So the first attempt was up to the half of range, and second attempt was also did not take the liquidity in the opposite direction, but it was making a higher high and higher low. So this was a trend inside the range. This was the daily time frame range, and we were trending at 4-hour inside that range. Okay, so this is the for the 4-hour trend. This is the range low, range high, not the range low. This is the trend. This is the trend low, trend high, lower high, higher high. This is okay. This is the low. This is the high. This is higher low compared to this low. This is the higher high, and this is the higher low. We had this liquidity on the 4-hour trend. This was the liquidity. on 1 hour time frame, we had this order block. So, so the price was almost at the range bottom, and the invalidation of the trade was comparatively closer than the targets. This was the invalidation of bullish bias. We were trending on 4 hour. This was a 1 hour order block. Trade was placed on this 1 hour order block. For this trade, I had two stops in my mind. The first was hard stop, and second one was if the price would hold below the order block. So this was the stop that I punched into the exchange, that I had placed this low, and if the price would have traded below this range, like if we had the 4 hour or 1 hour candle close below this order block market. So this is that 1 hour order block. So if the price would hold for 4 hours or 1 hour below this order block, I would have manually closed this trade. And target was obviously, as I said, it was liquidity in the opposite direction of the range. So it took out the liquidity, and I think I went for like 30 or 40% more. Yes, I missed a lot of it, but still it was, I think, almost 1:8 trade. So that's a good trade for me. Like after this, like if I have to plan a trade after this, I'll be looking for this level, the 0.5 level of this range. And maybe look for a break of structure. A similar thing, break of structure, a fair value gap, liquidity build up, then target this fair value gap and take a long position here. Or I'm expecting price to get rejected somewhere here and come down. But if it doesn't, like if it's keep going up, see if we have a clear support region here. In case weekly time frame close above this range, that will also invalidate this bias of price coming to 0.5 level of this range. Or if we break above this red line on daily time frame and start building some range here, I'm talking about something that happened with the link USD chart. So this support and this range, talking about this thing. See how this is in support level. I'll mark it with red. We broke above this support and now we are forming this range. And if the similar thing happens on daily time frame in the RPL USD chart, then again I'll be targeting highs of that chart. This is what I was talking about, ranging above that support. So this creates this liquidity, and so there are multiple setups, depends upon the market conditions and what's happening with dollar index and BTC charts. So first one will be something like this. If we get a break of structure here or a deviation below this low and a reclaim, so we'll see like what happens.